Cryptocurrencies are coming up in conversation more often in U.S. Congress amid ransomware attacks from cyber criminals demanding Bitcoin as payment. Joining us now is Republican U.S. Rep. Warren Davidson of Ohio. Welcome to the show, Congressman. So, one of your peers, U.S. Rep. Bill Foster, he's a Democrat from Illinois. He's calling for a law that allows the government to identify crypto users and reverse crypto transactions. As far as I know, Bitcoin was designed to make this impossible, but I'm wondering what your reaction is to this proposal.
I mean, that was really the fork, right, between Bitcoin Cash and Bitcoin is, can we reverse a transaction? And of course, the dominant fork, Bitcoin, said, no, we're not going to reverse it. That's the whole point of immutable. So it is a topic in the space. Foster's clearly on one side, I'm on the other in terms of immutability. And the idea that the other piece that's kind of glossed over is the effect of what he's talking about would require that you have intermediaries. Of course, a lot of people hold their crypto with a third party in an account, not something where they control themselves. And that's really what he's saying is the only way we really want this to be accessed is kind of like banks. You have a third party that the government can leverage essentially to spy on their customers, and then we'll feel safe. But if you're able to do it yourself, just like cash, he doesn't feel as comfortable.
Right. And this seems to be a common refrain. Congressman Brad Sherman, who's a Democrat from California, he chairs the House Financial Services Subcommittee on Capital Markets and Investor Protection. He spoke at a hearing this week, and we have a clip. Have a listen.
Cryptocurrencies are highly volatile. So if one person makes $1 million and retires at age 45 and 9 lose $100,000, Coinbase makes money. The one millionaire goes on TV and says how wonderful it is. And 9 others do not retire in dignity, but instead become eligible for Medicaid. Cryptocurrencies can ultimately be successful only if they're successful currencies. And evading the know your customer rule is the one thing that cryptocurrencies have as an advantage to the US dollar. Cryptocurrencies have the political support of the patriotic anarchists who are rooting for tax evasion. I hope we shut it down.
So, Congressman, I want to get your response on that. And is this issue of cryptocurrencies becoming more of a partisan issue in Congress?
Not really. It just happens that Brad Sherman's a Democrat. So, he's the most hostile to it. There are some Republicans that are hostile to crypto. And in general, I say it kind of breaks on if you love the Patriot Act and think that it was great that the government could spy on everyone just to keep us all safe. Of course, they're focused on terrorists and enemies of our country. But in the meantime, they spy on everyone. If you think that's a great law, you probably don't like crypto very much. But if you think, no, the government should not spy on American citizens, if they need to know information, of course they can get a warrant. But they can't just use all of the tools of state to spy on or control the population. And if you fall on that side, generally you like crypto, and that doesn't break on party lines.
Congressman Davidson, Congressman Sherman's hostility to capitalism and free markets aside, how closely is Congress paying attention to the role of stablecoins on exchanges? Does the lack of transparency in the likes of Tether, does that affect how Congress views crypto yet? Or is anybody at all worrying about that kind of stuff on Capitol Hill?
Yeah, I mean, that's a topic that we've wanted to address, people paying attention to the space closely for probably 4 years at least. And Tether disclosed publicly now, some of the composition of their holdings, and they essentially hold, commercial paper at about half of their holdings. And you look at a comparable net asset value fund, a mutual fund that's supposed to, be pegged to $1, but comprised of things other than just U.S. dollars. That was controversial when it, quote, broke the buck. It wasn't really worth that. Why? Because the underlying assets sometimes falter. And in the case of Tether in particular, they don't disclose exactly what those holdings are, where a net asset value fund does. And of course, a net asset value fund is regulated by the SEC. It's a security. So that's why Tether in particular and some other stablecoin developers do not want them to be treated they don't want them to be regulated as securities.
Do you think that they should be regulated as securities?
I mean, it's hard to see how Tether wouldn't be. I mean, if you look at it, it's not as well composed as net asset value fund, and it's structured very similarly. You don't have the same insight into it. So I think the space is ripe for some sort of regulation. I do believe you could develop a stable coin that is not a security, but it, when you look at what Tether's disclosed, it's really hard to make the case that it isn't a security. And I think that's where law needs to catch up. We've been waiting on regulatory agencies, the SEC in particular, to provide clarity, and it's kind of come regulation by enforcement. It's scaring off capital. It's scaring innovation out of the United States into other countries. And a lot of that goes because Congress hasn't taken action. It was really encouraging to have the hearing this past week and dive into these topics in a bipartisan way.
Good morning, Congressman. So governments all over the world are cracking down on Bitcoin largely because they see it as a threat to their national currency. I'm just curious, do you think that Bitcoin poses any threat at all to the supremacy of the US dollar?
I don't think it poses any threat to the US dollar. I mean, frankly, one of the things that you're talking about in terms of volatility, one of the real tensions that we need to look at is the use case in some ways is being undermined by traders. And, hodlers or hold on for dear lifers are believers of the use case. And that use case is distorted by, traders that are just moving the market, rapidly and in both directions at times. So, it's not like, the traditional commodity has an underlying use case that's well proven, say corn or soybeans. And yes, there are traders on that market. The futures market reveals a lot. But even there are better structures for detecting and preventing and holding people accountable for market manipulation. And again, law hasn't really caught up to practice in crypto.
So China is racing ahead with a central bank digital currency. And the question is, how should the U.S. respond? There are sort of two schools of thoughts on this. Does the U.S. need a digital dollar of its own? Or is there something else that they should be doing to respond to this phenomenon?
Really good question. Vice Chairman Quarles, the Vice Chair of the Federal Reserve, wrote a paper this week and shared it publicly that, made the case that a lot of the dollar is already digital. It's held in a way where transactions move through banks and is essentially a defense of the status quo. Brad Sherman, the most hostile to this space possible, said the U.S. should really follow China. And my reaction was, China's developing the creepiest surveillance tool known to man. I mean, they literally want to monitor every single transaction. They want a government credit agency that assigns social credit and essentially says who can be banked, who can't be banked, who can be approved for loans or transactions. It essentially allows filtering of transactions the way some sites or agencies filter content. And, that's a pretty dystopian future. It's crazy to see people advocating for that. But another hearing we had recently in financial services in the House of Representatives was for the concept of a government-run credit agency. So there are people that really do want to follow China's model. They're not boasting of it as much as Brad Sherman has, but it's a pretty crazy idea. I think the United States should go the other way and embrace the distributed ledger technology, blockchain, a more secure architecture, have it truly decentralized and immutable. And we could have a much better payment system, and we could really go a long ways towards restoring privacy protections for American citizens.
So not having a central bank digital dollar is what you're saying. The U.S. should avoid that model.
Yeah, certainly the Chinese version of it. I think you could have a central bank digital currency that wasn't, the idea that a central bank wouldn't really turn it into central authority is how do you create that check so that it truly has decentralized and yet a central bank? And that's the real quandary. Could you really do what I'm talking about is blend two things? Because if you look like last March and early April, the Federal Reserve intervened and provided a lot of liquidity, i.e. juiced dollars into the market, and they controlled those and interjected them at a time that the market was in free fall. I mean, there's equilibrium between buyers and sellers, a market functions, but when there's no buy side, it was in total free fall. So the Fed was able to intervene and create a buy side. They didn't do that, solely by buying it and putting it. They created dollars to put dollars into the system. And could you do that? And obviously that's different than what how Bitcoin operates with a fixed standard, or even how Dogecoin regulates. There's a timed release. So how could you provide liquidity in an emergency like that, and then limit the ability to do things like what has gone on since, where the Federal Reserve is essentially, they're buying $40 billion worth of mortgage-backed securities every month, and then they're doing other market distortions as well. So, the question is, can we get to sound money again?
So how does all this jibe with the idea of potentially regulating stablecoins? First of all, would you be willing to propose some sort of regulation on the floor of the House that would put stablecoins in the likes of money market in funds, or are you looking at it as, well, it shouldn't be called a stablecoin, but a free float currency like anything else?
Yeah, so the idea that all stable coins would be treated as securities, to me, is bad. I think you could create, the bill that we've got is the Token Taxonomy Act. And I say we, Darren Soto is my lead Democrat, but Josh Gottheimer on my committee. We have Republicans on it as well, in balance. And we're looking to add more. It makes a bright line test to say what is and what is not a security. And, if you fall on one side, well, then you're regulated by the SEC. If you fall on another, well, then you don't have to worry about the SEC regulating you. And to me, when I put Tether, for example, up against that bright line test, it looks like a central authority controls the composition of it. That composition is a basket of securities that are regulated as securities. How is it not a security? You could create a different type of stable coin that is no component of it as a security, and it falls with a central authority that can't change its value or composition. It would fall on the other side of the test, and it would not be a security. So that's called the Token Taxonomy Act, and we've wanted a hearing on that since we introduced it in 2018.
Mm-hmm. You think you'll get it anytime soon?
We're building momentum. This is real progress. I hope we'll get it noticed and at least have a discussion about how would this work. And the idea that there needs to be a bright line test is more important than the specific version that we've proposed. But the way we developed it was in consultation with industry, whether it was startups, established operators in the space, venture capital. NASDAQ was there, Fidelity was there, State Street was there. People brought general counsel, C-level executives, and we had a great discussion in the fall of 2018. And then since then, we opened it up for comment. We had great people from top business schools and think tanks around the country. And we keep getting feedback. So if we did go to hearing,
Federal Reserve, because they're also researching a digital dollar.
So the digital dollar concept is really, the Fed is taking a lead on that. We're expecting a paper on what they think about digital dollar or central bank digital currencies later this summer. And MIT's done that in partnership with the Boston Fed. There are others that have provided input, and I think we look forward to seeing that paper. A little bit of insight came from Vice Chairman Quarles' comments this week.